Welcome to Find It Live! Guys, we're here talking about the RBA rate decision coming live right at you right now. We're just going to be a bit of background. We've got Graham here, part of our Web Guru Analytics team. Kate, our editor in Australia here as well. Welcome. Guys, we're talking all about the cash rate right now. There's a bit of movement out there, Graham. Why does this matter? Why does the cash rate matter?
So if you throw up the first slide there, Joel, we can talk about why it matters. We've been surveying economists in Australia for the last kind of 4 years and asking them every month what they think the cash rate is going to do on any given Tuesday of every month. The cash rate obviously is important because it determines what you pay for your home loan. Yep. It also determines what you earn on your savings and a bunch of other things, but they're the main two metrics. So it's important for Australians to know. And if you look at the results here of this question, when we asked economists, what will the next cash rate move be when it happens? So we weren't asking them what will happen in the next cash rate move. We were saying, in general, will it go up or down in future? For the last year, pretty much consistently, we've seen economists saying, about 80% of them saying, the next cash rate move will be in a positive direction. But since the beginning of the year, we've seen a huge and dramatic drop in the number of economists saying that. And now it's looking pretty likely that we're going to see cash rate cut potentially in the next few months.
Okay, so what does this mean?
Oh, well, if there's a cash rate cut, it's bad news for mortgage holders because it's good news for mortgage holders because it means that your mortgage is going to become cheaper. It could stir the housing market. It could make it cheaper for people to get on board, especially owner-occupiers and first-time buyers with deposits saved who are looking to get on the ladder. It's going to be good for them, but bad for anybody saving that deposit for that home because obviously your savings are going to be worth less.
And how long has it been since we've seen a cut?
Oh, it's been well over 2 years since we've seen a cut. It's been pretty much flat at 1.5% for quite a while. It's been ages since we've seen any action in this market whatsoever. So, if there is any movement now, no matter what direction it happens in, it's going to be big news.
Okay, so we've got 1 minute until the decision, guys. Now, just before it, there's an election coming up. Unemployment numbers right now. What's the deal with that?
Yeah, so this is interesting. We asked economists whether it's going to move this Tuesday and why. If they say it's not going to move, why it's not going to move. And the main reasons that 3/4 of the economists said it's not going to move was because we're in a federal election cycle right now. And they say the RBA is going to be reluctant to change rates in a federal election month because people will be seen to be political, which is interesting because, if you think about it, if they don't cut rates because it might be seen to be political, that's almost political. But anyway, that's the main reason they were all
You can't really win one way or the other, right?
Yeah. Damned if you do and damned if you don't. That was the main thing. And the second one they all cited was that unemployment data is still pretty strong.
Okay, we've got the announcement out. It is unchanged at 1.5%. 1.5%. What do you feel about that? How do you feel about that, Graham?
Well, to be honest, that was kind of what I expected. I would have been surprised if they changed it so quickly after the inflation data came out, which was the thing that triggered people to start saying it was going to be cut. So inflation came out, and it was 0% for the last quarter, which is obviously bad. Nobody wants 0% inflation. The RBA wants that to be between 2 and 3%. 0 was not good, but I would have thought it would have been strange for them to make a decision so shortly after that data came out. Also, combined with the election year and the strong employment data are the reasons we're not seeing it now. But this does not mean we're going to be holding off with cuts for the rest of the year. We asked economists when they expect the rate to cut, and the most popular months were June, so next month, and August. So we could potentially see 2 rate cuts before the end of the year.
Wow, post-election might be all happening.
What do you think this means for households? Do you think that it's going to affect their budget?
Well, we've done some numbers here on how much it will actually save households. Generally, it will save people who are borrowing. So if you throw up slide 2 there, Joe, we have some mortgage size calculations here. This is based on mortgage sizes from $250K to $1 million. A 25 basis cut saving will save you from about $460 to about $2,000 a year, depending on your mortgage size. And the lifetime savings are there on the right for the full 30-year length of those loans. Obviously, a 25% basis cut would be one RBA cut. Generally, we may see 2. So even people with small, $250K loans could be saving $1,000 a year by the end of the year if we do see these cuts. This is why it's a really good idea to look at the rate that you're paying for your mortgage now. If you don't receive that cut when the RBA cuts, if your bank doesn't pass on the full rate, it's time to get onto your bank and make sure you get better value. And if not, look around at other options in the market. Last time there was a cut, we saw 3 of the big 4 banks pass on the full cut to their customers, but some of them delayed it by up to 20 days, which obviously makes them a little bit of cash in the meantime. We calculated $21 million made by the banks last time around by just delaying the rate cuts. But if it does cut, keep an eye on your rate and make sure you're getting that value.
And what, just for, for those of us that don't know much about rates, what kind of rate are we looking at? What's a good rate in the market at the moment if you ask?
For a home loan, generally if you have a 3 in front of your home loan is what we're saying now, it means it's a good rate. You'll see the big banks are advertising, standard variable rates in the kind of mid 4% range, but they're kind of larger numbers they tend to advertise, and most people have a discount from that number. So generally a 3 in front of it, you're in a good situation.
And that's still possible to find out there in the market.
Definitely still possible to find. Yeah, you can jump onto sites such as Finder and look at all the variable rates that are available right now. Obviously, if the cash rate drops, we may be looking at the low 2% being the good value in the market. Definitely,
so keep an eye on it.
It's a good time to have a mortgage outstanding right now.
So they've mentioned in the update here, they're talking about an inflation rate over the year so far about 1.3%. Does that seem low to you?
It's low for what the RBA will want it to be. They're going to be targeting an inflation rate of between 2 and 3%. That's kind of the general guideline of what a healthy enough economy would be. We've seen it around the 1.2 to 1.5% mark over the last number of quarters, so it's been low. So we may very well see a cut in order to stimulate inflation there, boost the economy, and try and get people back on that housing ladder because with prices falling, people are very reluctant to jump on board and buy a property.
Okay. Any other insights you can or suggestions? They talked a little about the Australian dollar being in its low range as well. Do you think that this might affect prices of foreign exchange?
Yeah, well, the dollar is something we asked about in the survey, but didn't receive much that was interesting on that topic. But when you're asking about other things that could affect the cash rate, we did ask economists that. So slide 3 there, Joel, has economic movements that we asked economists which would justify a cash rate. So this is saying, it's not moving now, but what needs to change for the RBA to make a movement? And by far the one they most commented on in their commentary and on this chart is unemployment. So if unemployment increases by a percentage or 1.4%, that combined with the low CPI inflation data we've seen, that would almost definitely push the RBA to make a cash rate cut. So keep an eye on those unemployment numbers.
They're talking about here, there's a potential been an adjustment in the housing market with conditions, they're saying, remaining soft. Do you think this is going to spur on, again, a change in interest rates in the future?
Oh, well, if it keeps getting softer, it definitely will. We've seen prices falling. There's some talk in the market now about the degree to which prices are falling is starting to soften, so they're not falling as quickly as they used to be, though they are still falling. The last time we asked economists about this, they were predicting 6 or 7% price drops by the end of next month. We didn't ask about property prices this month in our survey because we like to change it up a little bit. We might do again next month, so we might have more information there. But yeah, it's also important that house prices, don't continue to slide to such a heavy degree because people are going to be steering away from the property market. Though, if you're in the market to buy a house now and you
Great
do
time
have
to
that,
buy.
if you do have that deposit, it's a really good time to buy. And you need to, if you're going to be getting into the market, remember that it's more important than ever to get good value for your home. So if you, for example, think that the property prices in your area are going to fall by another 4 or 5% before the end of the year, then you need to be bargaining for a 4 or 5% discount on the price that you're being quoted for a home loan. So you price yourself towards the bottom of the market, and you're kind of building in a bit of extra bandwidth for yourself there.
Bit of wiggle room.
Awesome stuff. All right, that is the RBA rate. It is unchanged. How does everyone feel about that? Graham, final comment?
Slightly relieved because it could have been an awful lot of work and activity going on in Finder if the cash rate did move. Because basically what happens in Finder if the cash rate moves is that we start to track every single bank in Australia and look at how quickly they move after the cash rate. Usually when it changes, the banks will all come out relatively quickly. Last time, 13 banks announced within 2 days what they were going to cut by and when they were going to cut. So we'll monitor that, and then we'll monitor every single bank and when they're going to come in and how much that's going to cost or save consumers. So if it had cut, there would have been a whole lot of monitoring to go on in Finder. So we have a little bit of a reprieve for this month, but I think we're quite likely to see a cut in July.
Yeah.
Sorry, June.
June, post-election. It'll all be happening.
So keep an eye on it.
The best time. All right, guys, that is Finder Live. Unchanged rate. We'll see you guys later.
See ya.